This is back in 2001. It was like right after the dot-com, crashed. And then I seen the rise of it, and I was kind of, looking at on the side thinking, wow, this is a growing industry. I feel like I totally missed out. Back then everybody thought investment banking.
APAC sales head for Copper, one of the leading custodians in our space.
What do you think are some of the key drivers of innovation in the space that you're operating in right now?
I'm imagining two sets of questions there. Number one is the institutional play in crypto and blockchain, because when they start adopting crypto more and more, that's when they require custodians.
Multi-party computation technology, where we don't even create private keys. It's split into 3 shards, and each of those shards don't contain any information about the other 2 shards.
Tech continues to emerge, and your experience in the space. Would you say that there's anything in particular that's exciting about what's unraveling?
It's kind of like a traditional gold vault, right?
Yeah.
Like the custodian has one key and the client has one key, and they open together.
The kind of journey you had from an investment banker to hedge fund manager, you built your own hedge fund, then you moved into crypto. It's a very interesting journey, and you have gotten a global perspective into things.
It only took FTX to happen for them to finally realize this.
Very interesting. I love the way you're putting that.
Small application of AI, and it's not the AI that people think about in ChatGPT and stuff. This is completely different. Actually, in the crypto trading world, it's full of counterparty risk. I think you just have to lead by example. Master never comes with a flick of a button. You have to grind it through until you reach that.
I'm just reflecting on the things you have said, and it's amazing. Love it, fantastic. Hello everybody, welcome to Quantum Minds podcast. My name is Kapil Dhiman, I'm the co-founder and CEO of Quranium, and I'm joined by my amazing co-host Olivia Karlsson to interview one of the finest personalities in the Web3 space, Taka, who is the APAC sales head for Copper, one of the leading custodians in our space. Taka, welcome to Quantum Minds.
Thank you very much for inviting me.
It's a pleasure. Thank you for taking out the time, and we are really looking forward to an amazing conversation today.
Absolutely. So am I.
So starting with Taka, you have had an amazing journey so far, which has, and now you're leading APAC for Copper, which has set a benchmark in custodian business in the Web3 space. If I can request you to, give your background to the audience, you can do better justice. What is Copper, what you do, and what has your journey been so far that has led you to become the APAC sales head of Copper?
So Copper was established in 2018 as a digital asset custodian. Mm-hmm. When we looked into this space back then, and you can imagine it's 2018, right after the bull market crash, mm-hmm. and investors were obviously lost a lot of money, and we were looking for a custodial space so that to make sure that institutional investors, when they do come in, what kind of infrastructure would they need? And this is the first of mine that the founders really thought of. And when you think about traditional finance, when you think about custodians, generally investors will face prime brokers, and then the prime brokers will face the exchanges and such, which means that institutional investors don't really have to worry about counterparty risk too much because they're regulated prime brokers, and exchanges obviously are exchanges. And if I'm trading against a prime broker, they have the custodial solution already ready. They have the balance sheet to trade against you. In crypto, as we know, we took out the middlemen, and then investors can go direct to exchanges, mm-hmm. which means that I'm taking a huge counterparty risk on the unregulated exchanges. Now, we've seen time and time again exchanges getting hacked and going bankrupt. So if I'm an institutional investor, I'm a hedge fund, I have partners, money that I have fiducial duty to manage safely, I can't just send it to an unregulated exchange. Mm. So we worked with institutional investors how we can make this institutional environment or the infrastructure ready for their adoption. And we worked with, initially, because we're a British company, a few British firms, to think about what is the right product to go to market. And what we thought of is how the counterparty risk is the most important thing. there's so many counterparty risks that we face in the crypto trading world. We have exchanges, we have OTC brokers. Now in the world of DeFi, we have smart contract risks. Actually, in the crypto trading world, it's full of counterparty risk. So what we wanted to create was a custodial solution that we could mitigate each of these counterparty risks. So currently, Copper is well known for its flagship product called ClearLoop, which allows for institutional investors to not pre-fund exchanges. They can leave assets in custody, and that balance will be reflected or in kind of a credit to the exchanges, so that when I, let's say, post 10 Bitcoins to an exchange for margin to trade derivatives, that 10 Bitcoin will be reflected onto the exchange without ever having to move those funds onto it. So this allows institutional investors to mitigate that counterparty risk because I'm not leaving funds at the exchange and it's still with a custodian. So that's we had various iterations of this product over time, but we perfected it because we've seen, the likes of FTX and we had, huge market swings in the market. So time and time again, we've had to tweak our product in order to take it to where it is, and obviously there will be a lot of more iteration going forward, but that is the core ethos of our product, is how do we mitigate counterparty risk across the crypto infrastructure. That's first and foremost what Copper is trying to build out. And again, after that, we mitigated these counterparty risk. We'll have other products that I can explain to you later what we're trying to build so that institutional investors can feel safe and trade more, increase their risk limits in order to trade more.
Interesting. So, for our audience, which is now getting into the Web3 space and the way space is changing, the institutional play getting involved, either of the baskets, how would you define a custodian? And why it becomes relevant? You explained very nicely about deleting the counterparty risk, but for newbies who are entering the space or some companies who are now wanting to understand whether or not they need custodians, so how would you explain the importance of custodian to them? What is a custodian?
Yeah, so custodian is it's a service that is usually offered to institutional investors to hold securities for them. So let's say I'm hedge fund A and I want to buy Apple shares. And normally if you're crypto native or Web3 native, you'll think, I'll just go to an exchange and buy Apple shares. But in the traditional world, that's not how it works, right? Even if I'm a retail investor, I'll open up a brokerage account and I'll give them an order to buy Apple shares. And what happens in the background is that I send fiat or money to that to the broker, and then if they have inventory of Apple shares, they'll sell it to me. And then if they don't have inventory, then they might go to an exchange, or it could be other brokers out there, and then secure that Apple share. So basically, as a retail investor, I'm only facing this broker. And once I purchase the Apple shares, I don't take it back to my own vault at home and store those certificates, right? It is still stored by the broker, which they will have a custodial partner to hold the securities. So let's say I would sell my Apple shares for something else. I would sell for cash or whatever. I want to sell it, and then I'll buy something else, let's say Google shares. Then what would happen is that the Apple shares will transfer to another holder of that Google shares, and it'll be switched between the custodians, basically, as an infrastructure. So there's no movements of those shares to an exchange or a retail investor or institutional investor. It just gets done within these kind of custodians. So basically, what we're trying to create generally for crypto custody is that we want to be that similar type of infrastructure, so that you don't have to directly face exchanges. You don't have to face particular brokers or anything like that. You can bypass the brokers, but you can still have a custodian because that's where the assets are safeguarded. So in the future, we can work with other custodians to actually, change hands with the assets that they sell and buy.
That's super interesting. And I think one of my questions that I've been sitting on since way before we started recording is, as tech continues to emerge and, your experience in the space, would you say that there's anything in particular that's exciting about what's unraveling in the space of custodians in general? What are some of the changes that you've seen in the past years? And is there anything in particular that's exciting you right now?
So for custodians, initially everybody kind of developed their own product, but it was generally kind of the same. Initially you had cold wallet, and then it turned into hot wallets. And then, generally it was just to store assets. And then the security protocol over that has changed over time. So, it used to be a private key held with the custodians. Now there's a multi-sig structure so that not one person can just get a hold of the private keys, so you have to sign. It's kind of like a traditional gold vault, right? The custodian has one key and the client has one key and they open together. So, and then now from 4 or 5 years ago, there's this new wave of security protocol MPC technology, multi-party computation technology, where we don't even create private keys. It's split into 3 shards, and each of those shards don't contain any information about the other 2 shards. So if an event of a hack of one shard, they won't be able to find the rest of the 2 shards. And usually with these cold wallet solutions, they're all offline anyway. So there's no vector for hacks in that sense. So that's something, again, MPC has been around since the 70s. It's nothing new, but that's been implemented into custodial space. Now, the other part is once we solve that cold custody and all these security protocols, some people branched out to become just wallet infrastructures. So, in the world of Web3 and all that, you just need wallets. You don't really need custodians. You don't need that financial services, let's say for a gaming company, right? So, there are people who just decided we'll just do wallets to service the Web3 infrastructure. Some went out and said, okay, we'll just continue evolving in this custodial space with the cold wallets, and then we'll add in peripheral services like OTC brokerage or, whatnot. And then for us, we specialized in institutional investors. Of course, there are a lot of foundations that we work with and VCs and et cetera, but we build specific products to serve the institutional investors. So we found a specific client type that we can really succeed in. And I think a lot of the custodians in the space have found their own kind of niche, and then they all are going into different directions. So I think it's a natural thing. Everybody evolves into their own categories of what they want to do, and I think they'll continue to do so. And I'll probably see more services, high value added services built on top of them, because obviously custody fees are kind of, I wouldn't say race to the bottom, but it's just gonna get squeezed over time. I mean, if you look at State Street, if you're a hedge fund in a tier 1 financial jurisdiction, it's 4 bips per annum. I mean, it's a complete volumes game, right? So luckily crypto hasn't gone there yet, but it's still getting squeezed. So everybody's kind of moving on to the higher value services. What can they get? What can they serve clients that can charge a little bit more?
Got it. So the larger play for custodians is towards institutions, when they have to kind of secure their money. And so I'm imagining 2 sets of questions there. Number 1 is the institutional play in crypto and blockchain, because when they start adopting crypto more and more, that's when they require custodians. So how have you seen this journey? Because initially when the whole crypto scene started, it was more of retail oriented, and for institutions it's much larger risk to change their infrastructure or start trusting a new infrastructure. So crypto is completely new for them, and it's a new vertical they would have started. So first question is, how have you seen that transition happening? What caused that transition, that these large institutions started trusting crypto? And currently, what is it that these institutions are using crypto and blockchain the most for? And the second set of question is, the larger play that custodian comes into picture for is so that these institutions do not have to trust third-party exchanges, but they are trusting the custodian as well, right? So they are trusting somebody with their money. So what causes that win of trust from the institutions. So these two sets of questions, if I may put to you.
Sure. So when I first started off at Copper 3.5 years ago, and they had this conceptual product called Clearloop, as I just explained, and I thought this is brilliant. I come from the traditional hedge fund space myself. I was in it for 20 years, and I knew that sending my funds to an unregulated exchange is not a really good idea. So I knew that there would be institutional investors looking for this type of product. But when I got in, I quickly understood that most of them are still, especially in APAC, are still crypto native. So they come from being a retail investors themselves, accumulating a sort of wealth and then gathering funds from families and friends and starting up a crypto fund. And those people were already accustomed to taking that risk on exchanges, or if they even thought of that as a risk. And some, especially in China, there's a lot of these big exchanges like your Binance and OKXs of the world. They established personal relationships with the founders or senior management of the team, and they trust them more than somebody who they never seen before, or like a British company like Copper. So I knew it was going to be a very uphill battle to win their trust and understand the logic of mitigating counterparty risk. It only took FTX to happen for them to finally realize this. So generally, it took me nearly 2 years of that grind to explaining and educating institutional investors that in mitigating counterparty risk is important. But when FTX happened, they understood that and they started coming to us and said, now I understand what you're talking about. So that, I guess, a lot of things when you have a very, standardized thought of how this infrastructure works, it's very hard to change people's minds unless there's a big external factor as it presented. And that was exactly how it played out. So now, up until then, I wouldn't say that there were traditional hedge funds or traditional investing firms very, very active in that space. Obviously, there were, but not a whole lot, especially in the hedge fund space. But I think there's two things. I think the interest rate environment changed, and then the way that people or the institutional, traditional securities are traded have changed quite a lot, and also the infrastructure for the crypto infrastructure, including custodians, have changed quite a lot. So one of the things, as I mentioned, interest rate environment. So, before it was zero rate environment, real assets were the thing. People were investing in gold and especially during COVID, right? I mean, people were buying a lot of like real assets because there was no interest rate. And then after the interest rate got hiked up, then it made sense for them to go back into fixed income products, right? And equities is always going to go up, right? I mean, that's always the case. And then, after all this money printing after, decades, there is a propensity for investors to allocate more capital into equity. So that hasn't changed. But now it's become, I come from a traditional value investing background. So, if I look at the valuations on many of these businesses in the stock market, it's way out of proportion. It's not really reflective of fundamental value in stocks. So now it became a lot more narrative driven. It's become story driven. Story driven mean like thematic. There's going to be AI, so let's buy NVIDIA, that kind of thing, right? Yeah. So it become a lot more like that. Then let's look at the cash flow of the company. Let's look at the financial statements. Let's take that apart and then see what the true fundamental value is. So that trade has been very difficult, especially since Lehman collapsed, but even accelerated after COVID because of the heavy money printing that happened. So then investors who used to invest in that space no longer can use their strategies to deploy capital into it. So then and then in other factors, like let's say an example in China recently. The government said investors cannot short sell. They can't use quantitative trading strategies. So they are starting to look at, outside of the traditional stock space that we're looking at, let's look at other asset classes. Crypto is quite easy to get into, and then it's pretty much ripe for quantitative trading strategies. So I had a lot of conversations with Chinese hedge funds that are looking into this space. So that kind of changed. And then the third part, as I mentioned, is the infrastructure. So, since I joined Copper, I think even from way back then, regulation has really underpinned a lot of the infrastructure players. Like in Singapore, in 2020, the PSA license has been enrolled out. OTC brokers, payment solution companies, and exchanges were obliged to get a license. And now they just recently expanded into custodians. So I think a lot of the infrastructure players or the service providers are being regulated, which allows for institutional investors to feel comfort to working with these service providers. So I think various factors changed so that we're starting to see a lot more institutional investors come into this space.
Got it. So you mentioned that your journey before crypto was into the hedge fund industry, right? So let's try to kind of take a step back and see how your journey has evolved. So if you can share, what before the crypto world, what was your life and what were you doing, and what caused your decision to come out of, let's say, the TradFi business or the traditional industry to crypto?
Sure. So I started working for an investment bank in the proprietary investment team. Investing in special situations. We call them special situations because corporates were undergoing like bankruptcy events, restructuring. All these things are all kind of enrolled into this special situation definition. So we'll look at these companies and then we'll see what their cash flow looks like, what's the fundamental value, what's the underlying business environment look like for this company, and then we take a smart decision whether to invest in this business, whether it be equities or bonds. So that's been my kind of really background. So I started off in investment banks. After Lehman collapsed, I moved over to the hedge fund side. That's where I moved from Japan to Singapore. This is back in 2009, and I worked in Singapore, Hong Kong, and back to Singapore. The second time I came to Singapore, I launched my own hedge fund, as I mentioned, like pretty much based on like value investing. Deep value, which is a little bit of like that distressed situation, and also a little bit of shareholder activism. And so crypto came in like completely separate from my professional world, right? So that's more from my personal wealth kind of, kind of portfolio balancing. I always had 10% in gold, and having moved from Japan, Singapore, Hong Kong, Singapore, like it was a lot of movements and a lot of movements of gold as well, right? So I thought this has to be something more light than this, right? It has to be it'll be great if I can get something digital version of this. And I didn't want like ETFs because you don't have the underlying. So, normally I invested in the actual gold bullion itself, but then I kind of remember in the back of my head, there was this thing called Mount Gox, and in a gym where I used to train jiu-jitsu, and there was a guy that joined this crypto exchange back in 2013, and he was telling me about, I joined this thing, and I kind of remembered that exchange was called Bitfinex, and I just kind of I reached out to him and said, hey, can you tell me like a little bit more about this Bitcoin stuff? and then I did my own digging into it. And obviously I'm not going to replicate I'm not going to explain the whole concept of why it could be digital gold, but that's where I kind of found out, okay, maybe I could replace some of that gold with Bitcoin. And I also thought about other applications of it. I mean, having lived in Singapore and Hong Kong, we see a lot of people who are from other countries working here, and they have to do remittance to their families on a monthly basis. Why would they be charged 15% on both legs, sending it, and then the family paying X percent on the receiving end, right? So they lose like 2 weeks of work. Where I thought with using the blockchain, if you could move money, transfer money, that would be instant and then low fees. I thought this is a no-brainer. They could be applied for anybody who's doing global remittances. So that's kind of why I kind of really thought, okay, I'll hold some Bitcoin. This thing's gonna grow, and then I don't know why I professionally wanted to get into it, but to be honest with you, I think I remember starting off in my work and looking at this is back in 2001. It was like right after the .com crashed, And then I seen the rise of it, and I was kind of looking at on the side thinking, wow, this is a growing industry. I feel like I totally missed out. Back then everybody thought investment banking, but the people who were working at Google and Amazon all doing successfully, and I thought, this is a chance to kind of get that dream. Like it's going to be a financial revolution. I have to get into it. So those were the factors.
Wow.
Very interesting. I think it's so fascinating to hear about, the fact that you have kind of got this versatility in geographical experiences. And, you're speaking a little bit about, the things that are changing in the space. And, some of those changes are probably like proactive changes. Some of them may be reactive. I'm just wondering, what do you think are some of the key drivers of innovation in the space that you're operating in right now?
That's interesting. So we've been trying to, as I mentioned, building a little bit more of different stacks on top of what we're doing, right? So one of the products that we're looking at is lending. So after 2 or 3 years ago, you had your Genesis and Celsius and all these companies doing a lot of lending in this space, and then they all went belly up because of poor risk management. And we wanted to kind of recreate that in a better way. We have the custodial solution, which can be a collateral management solution as well. At the same time, it's no different. And we can build a lending product where we can match long holders of either fiat or any type of crypto asset to lend to our trading firm clients. And what the technology part stack that I think is going to be really interesting, and I think we'll be exploring it a lot more. Maybe we'll start off quite manually in the beginning, but if you look at the applications of AI these days, I think the most important thing in the financial world is credit risk management, and crypto is such a volatile asset class. So if you want to meet margin calls or even predict margin calls, I think AI can really help with this. So we can call margins way ahead of time, or at least, from the lender side, we can notify the lenders that they could be potentially a margin call coming in the next, whatever, a few hours or whatever it is. So I think that part, and this is a small application of AI, and it's not the AI that people think about in ChatGPT and stuff. This is completely different. But those things can really enhance risk management on the credit side. And I think that's across not just crypto, but any asset class. And I feel like a lot of the asset classes nowadays are becoming a lot more volatile than before. Yeah. So I think that could really help with that.
Got it. So this is the one part in the podcast that we do is, of course, understanding the industry that you have so nicely explained. But we are also always very curious to understand the mindset of the person who's driving that, right? So really trying to dive deeper into your mind of how you operate as an individual, how you think, because these things that we have discussed so far, you have explained it very simply, but it's super complicated stuff, right? When there is billions of dollars getting involved in the movements of funds here and there, and you're accountable for that movement and taking those small decisions that drive magnitude of changes, it's a difficult position to be in. And the kind of journey you had from an investment banker to hedge fund manager, you built your own hedge fund, then you moved into crypto. It's a very, very interesting journey, and you have gotten a global perspective into things. How from gold moving to digital gold, taking those sort of decisions. It speaks a lot. It speaks a lot about your mindset. It speaks a lot about how open to change you are. And I caught on it when you said you used to practice jiu-jitsu as well. And I'm sure she did.
I was like, okay, we're going to talk about this. Yeah.
So that's another angle of your personality, how you're bringing in fitness, mindset, and then applying that to this tech world and emerging industries, which is flourishing further. So I would love to start diving deeper into you as an individual. What has been your individual mindset journey been? And what has caused those triggers which allowed you to take these kind of decisions much more effectively? And how do you usually maintain your calm, maintain your sense of peace, which allows you to be much more efficient at work?
Sure. So there's two factors that I can answer. One is being adaptable, and I could give you a reason of that. And then two is to accept the grind. and accepting the grind, meaning that mastery never comes with a flick of a button. You have to grind it through until you reach that mastery. So number one, the adaptability, I think, comes from me moving to the United States when I was 5 and going from Japan, which is a very different culture, to the U.S. And then learning the language. I lived in an extremely, white neighborhood. There were no Asian people around. It was just me. And this is back in the 80s, so it was quite different from most people where I moved to. And then lived there for 10 years. My Japanese still at 5 years old level. And then I moved back at that age and then have to relearn Japanese all over again, relearn the culture. There was a lot of struggle with that because of two countries being so polar opposite. And that allowed me to take a look at myself and think, okay, who am I? I've done quite well, in back home in the US. I'm surely it's just because of the language issue, I'm not getting there. The education system's different. The way you express things are completely different. So, having to trying to maintain that standard of what you had before and then trying to build that there. And once you accomplish that, I felt, wow, I could do this anywhere, and then that's why it was a very easy decision for me to move from Japan to Singapore and then again move to Hong Kong and then come back here again. In between, I actually lived in London for a year as well. So, I actually lived in quite a few financial hubs of the world. And each time I have adapted very well to each society and taking a lot of good values from each society. I've learned new things about people, how they think about not just work, but their lives, their family, friends, all these type of relationship things. And I thought, I could be a better person if I can take all these things and just, put it inside of me. So I don't really believe in this category of I'm Japanese, I have to be this way, or I'm American, I have to be this way. You could be anything, right? You can take all these values from anybody and then make it yours so that you become uniquely yourself. And I still believe in that. And I think that formed a part of me that's very adaptable. And I can go into any country or situations and talk to people and build relationships. The second part, you mentioned jiu-jitsu, but it doesn't really start from there. I've always been an athlete since I was a kid. I've done competitive swimming and skiing during my youth. As you can imagine, even with jiu-jitsu, it's an individual sport. It doesn't involve team sport. It doesn't mean that I'm not a team worker, right? But if you can think about it, like swimming, like all you're doing is swimming laps to shave off a second, not even a second, like millisecond or, so that you just have to keep going and then believing yourself that you can do it better. And you're refining your techniques, you're refining your goal to shave off that, a second. And you can spend like a whole year just to shave off 1 second. And then you have to treat that as an achievement, right? Wow. And then, skiing is the same. How can I turn better? How can I, bend in a little bit more? Where should I put my axis of gravity? And then try to make that turn, more fine, more accurate in order to get there. So these little micro, kind of refinements that you have to do to yourself to get a little bit better. And I think jiu-jitsu is exactly the same, right? You start off complete white belt, you have no idea what you're doing, and then you get smashed by all these black belts and higher belts. And as you continue, you learn a little bit more. You practice that thing over and over again. So it becomes muscle memory, so you can do it, without even having to think. And then if you do it over, 13 years, and I'm a black belt now, you're an accumulation of all that effort that you've done over those years, almost on a daily basis, so that all the things that you do, you don't really have to think about it anymore. And I'm still trying to perfect it. I'm still thinking I'm not good enough, and I'm keep going. And that mentality, I think, is you can apply it to anything, right? I also, practice instruments as well. It's the same exact thing. I've played piano, guitar when I was a kid, and then as an adult, I've been practicing cello, and that is an extremely difficult instrument. And again, it's even before coming here, I was practicing a little bit, so it's like just a little, even 5 minutes a day, you have to like kind of practice so that, you can hit that note nicely. The bowing is like soft enough that it's like, it sounds, like soft and sweet. And all these things, I think, you apply to work as well, right? Or you can apply it to anything. And you talked about being calm about it. I don't get bothered by a lot of external factors because of all these things that I've done, right? So whatever that comes, I know that if I keep grinding and I accept that grind, I'll get to some place. And then if I don't consistently do it, I'm not going to get there. So that's been always my philosophy of like life in general, is like small increments and enjoy that process.
Very interesting. I love the way you're putting that, especially like from the acceptance part of the grind to the agility element. And so this podcast is sort of geared towards, young entrepreneurs that are working to, optimize their mindset. And, the two things that you mentioned kind of, I think, translate into personal ownership, taking full ownership for the outcome, especially like if you're doing individual sports. I used to do figure skating. So that's very like, precise in the way that you're being judged, but it's also like, it's down to me. It's down to what I'm eating. It's down to how I talk to myself, things like that. So just, in the light of inspiring or impacting people that might be, thinking of, okay, how can I optimize my mindset? What role does ownership play in the outcome of, creating the life that you really want?
Yeah, that's a very interesting question. I think about it quite a lot, and I also teach my kids about this as well as my staff too. But I think ultimately it's all about ownership is discipline, right? And I think discipline makes a huge change in whatever you do. So if you're gonna do something, do it the best you can. And if you want to do it the best you can, you have to have that discipline in order to achieve that. So whether, maybe you're tired, you just want to watch Netflix or eat a bag of chips or whatever it is, but, ultimately that's not really going to get you to where you are. So you have to have that discipline. And that is real ownership of yourself, your feelings, your physical and mental, right? So that's something that I really install in everybody that I work with, or my family as well.
How do you define progress?
Progress is again, I think it's just about incremental things. And obviously a lot of people don't see incremental improvements, right?
Yeah.
And people are actually kind of scared to test themselves as well.
Absolutely.
So you have to put yourself in an uncomfortable position to show where or how you have progressed. Right? It's kind of hard to explain it in terms of like business terms a little bit, but even going back to like sports, you do a competition every now and then see how you progressed, right? So if you can beat the person that you actually didn't beat before, that's progress. Even if you don't get beaten, even if you don't beat the person, but you actually scored a little bit more, that's progress, right? If it's not like these kind of combat type of things, if it's just playing football or something, and you could just play with your teammates, you can see a little bit of progress because maybe that assist that you did on that corner kick was a little bit more accurate than last time. You have to enjoy the little progress that you see, and you have to be able to spot it, and you have to be acute to that and also enjoy it at the same time. I think the enjoyment always takes is never really fulfilled because everybody's chasing after results. And I don't think the result is always the most important thing. I think the most important thing is enjoying the process to get there. And if you enjoy the process, you will see the progress.
Yes. Oh, yes. I completely resonate with that so very much.
Yes. Yeah. I'm just, reflecting on the things you have said, and like it's amazing, like relating to it so much. In all of this, the most important thing that ultimately comes out for an individual to be disciplined, committed, accept the grind, put yourself in be comfortable being uncomfortable, right? It all circles down to time management as a very important part, because these things require commitment, and a commitment is like ultimately everything trickles down to time. How do you manage your time? Because you are, perfecting so many things and applying that to work, growing in work as well, growing in your personal growth as well. So there has to be a lot of discipline between these things. How do you manage your time? And then accordingly, what would be your advice to the youngsters who are watching this, who I think in this age, and especially in the crypto age, I think time management is like not in the dictionary.
Yeah.
You say 5 o'clock, I think it's 6 o'clock. And I also come from a traditional world. 5 o'clock for me is like 4:55. Even if I am 1 minute late, I start getting like uncomfortable. So how do you do it?
I just put everything in my calendar. So you probably have your, Google or your Outlook calendar. I put everything in my calendar. So if I say I want to spend 30 minutes doing, like replying to emails, I have that slot of 30 minutes to just focus on that only. I don't look at anything else, just reply. I don't reply to anybody else. If new ones come in, I just want to go through all that list. Next 30 minutes, I want to do, and then, just like that, I just make all these like 30-minute kind of schedules. So I could go through all the things I want to do. So even if it's like personal stuff, you can say, after I've done my emails, I'm going to do 30 minutes of cello. And if I'm done with that, I'm going to do 30 minutes of like, I don't know, watching YouTube videos of my jujitsu techniques, or something. So I think, it doesn't have to be 30 minutes, obviously. It could be 1 hour. But I think if you put that into your calendar, you have to do it. Right? You know that you have to do it. So there's no, I'm just going to walk away and watch Netflix or something, right? It's you're going to do it. And then but discipline ultimately comes down to yourself, right? Yeah. So obviously you could put all these things in a schedule, but you could decide not to do it. But, I think if you do it, then you know that you're going through all these tasks that you have to do throughout the day. And you have to have ownership of that, right? You have to think, okay, if I miss this, then today I didn't complete my mission, right? And then how many days of failed missions do you want to have, right? That's up to you. I rather have everything completed every day, so that I know that for everything that I'm doing, I'm actually making that progress.
So it's a bit of an art form in a way, like the way that you have to put things together in order to find that accountability, I'd imagine. Yeah.
I get a lot of people saying, how can you do all those things on the side while you do work? But it's very simple. You just put it in your calendar. Yeah. Most people think, I don't have time for that, but I think they're not managing their time very correctly.
Would you say that, like, and this is just out of my curiosity, would you say that some of these activities that you do that are creative, so to speak, like let's say music or jiu-jitsu, there's a concept that, some of the inspirational people that I know talk about, and it's about active resting. So instead of just sitting on the couch and watching Netflix, you would get more out of shifting your brain into a different, sort of frame. And that way, increase efficiency when you go back to work. I'm just wondering, is that something that resonates with you? Like,
absolutely.
Yeah.
So when I'm doing, jiu-jitsu or practicing cello, I'm not thinking about anything else. Right? I'm spending my whole brain thinking about jiu-jitsu. If you're doing combat, there's no time to think about anything else. Oh, what am I going to have for lunch while I'm fighting somebody, right? It's not going to happen. So that time that I'm doing jiu-jitsu, I'm fully committed to thinking about jiu-jitsu or cello too. If I'm thinking about my lunch while playing cello, I can't perform very well, right? So I am very much focused on doing it, which actually kind of is a bit meditative, because you're not thinking about work. You're not thinking about, the issues that you have with your family or your friends or your girlfriends or boyfriends. You're just spending that time thinking about it. And that, I think, will allow you to refresh your mind from whatever you're, stuck on, and then get back to it after you finish that task. So I think it's quite important, actually, to set aside some time, not to be receptive of entertainment or receptive of something external to you, but you actively engaging something that you're doing.
So when these two worlds converge for you, one is what you're doing for your personal growth, where extracurriculars gets involved, like whether it is jiu-jitsu or playing music instruments, that gives you a sense of personal growth as well as a peace of mind. And there's a second world, which is where you are literally handling billions of dollars and you're at the peak of responsibility. You have to be two different persons in these two situations, right? So when these two worlds converge for you, do you think because you have this one side, where you are investing a lot in your personal growth and you're bringing in that element of discipline, that helps this exponentially? Or it's the other way around, because there are so many responsibilities here, you need to blow off some steam and you need to kind of do things here, right? How do you see these things?
To me, it's all the same. Yeah, to me, it's exactly the same. I apply the same discipline to both, and I'm fully responsible for the outcome of all those things myself. Right? Obviously, in a corporate environment, not everything is under my control, but you have to think that you're doing the best out of that situation or the cards that you've been dealt with, and that even if the results don't come the way you wanted to, at least you put your 100% into it. And I'm okay with that. You can't control everything in your life, right? So, as long as I'm enjoying it, I'm doing my best at what I'm doing, then, whether it be sports, work, or anything else, it's all the same.
Could you maybe take an example of some difficult decision you took at work, or some situation where there were a lot of complexities and took a decision, and your mindset that you have developed over the years by engaging in these activities, which is fitness or giving yourself a lot of wider flavor towards the world, that helped you protect that situation or handle that situation better or differently? Like it helped, it connected. Any example that comes to your mind?
Well, aside from copper, I had much more difficult time in the investing space, right? Because sometimes the positions that you put on goes against you. So then I look at my losing position and I think, okay, what was the thesis that I originally went into? How has it diverged? Is it from market reaction that has nothing to do with the underlying company that I'm investing in, or it has something with the company? There's many different kind of things that you can think about. And if you come to a decision that says, and that at that point when I was looking at it, I thought, okay, well, the market hasn't changed. There are obviously some confusion in the market, but I know that this company's decent. It will still grow, but the market is turning against it, and for some reason. And sometimes I don't understand why it is, but I don't think it's that. So okay, I don't want to lose that much money, but I can always get into it at a much lower position. So I just sell that and wait for it to drop even further, and I buy back again. I did this many times. This is not just one example, but many of them. And so it kind of goes back to what I was saying is, there's many external factors that can go against you, whether it be your positions or your boss telling you this, or you get fired from a job, whatever it is. Well, a lot of things, you can't control. So what you can control is how you reposition yourself to it. So it's the same with jiu-jitsu, right? If you're fighting somebody, they put you in a chokehold or something and you didn't really expect that, don't panic. How do I kind of get out of this bad situation and then turn that around? So it's the same with investing as well. I'll just take my losses here and then get to a better position where I can re-enter again. So all these things that you have to, I said panic, but this is emotional decisions, right? Then you can remove those emotional factors out of it, especially in a difficult situation. Because the way you look at a situation, the fact is always the same. You're in a bad position, right? How you kind of address that negatively or positively or any way that you emotionally would feel is solely up to you. So I could remove that emotional element out of it and take a deep breath, think about, the underlying factors of everything, and then kind of reassess and reposition. So that's, I can't give you one pure example because there were so many of them.
Yeah, sure.
but yeah, that's kind of overlaps with my personal life, what I do, and then with work as well. So I don't know if I were to give an example. Let's say you're married, you might have a kid any day, and then you get fired from your job, right? It's your choice if you want to panic, or you want to go berserk, get angry at somebody, or whatever, go drink a whole bottle of whiskey, and that's totally up to your choice. But even if you do all that, the fact of the matter that you're fired hasn't changed, right? The way you're reacting towards it can be different. So what is the best mentality that you can put into that negative, fact that is presented to you? then look at it without emotion and say, what can I do? Okay, I can contact these people. They're my friends. I could probably, get an interview from these people or whatever, you can do out of that situation. Spending more time thinking about that is more important than emotionally reacting to it, right?
Yeah.
And that's all the same with anything, in my view.
Yeah, I think that's really a good way to put it. I think you can kind of bake in like an element of humility towards yourself that like, okay, it's a process, it's a marathon, it's not a sprint. I can afford, to have a little bit of wiggle room as long as I can be like resourceful in those moments and like slowing down time and being extremely present with what's right in front of you. I think that's kind of like how I interpret what you're saying.
Yeah.
So yeah, I think that resonates a lot.
Yeah, it's like if you're doing figure skating and you miss the turn or you miss the flip and you touch the floor with your hands, are you gonna panic? Usually, probably your skating is probably gonna get worse after that.
Yeah,
right. But
absolutely.
if I say, okay, brush it off, forget that it happened. Let's just do it, as planned. Then your positive mentality can affect how you perform afterwards.
And perhaps even like the expectation that you might have placed on yourself before has a negative impact on your agility throughout your mistakes.
Yeah, I think that's great. So I think you hit the nail. So expectation is also like is something that you create for yourself, which can be managed if you don't have so much of it, right? So if you start off with something, or you start a business, or you start, I don't know, a sport or anything that you want to do, if you have this high expectation that this is where I want to be and this is how I should be, then you're probably not going to enjoy any of it until you reach that point, right? And so I think in like micro kind of improvements. So say, okay, I've never done this thing. I'm going to set my goals super low, manage, and then if I do this, that's a win. Next one, micro steps there. And if I get better doing that, then I'm happy, right? So that increments of improvement, you can enjoy every single part of that process.
Do you think one should keep high expectations of themselves if somebody's very ambitious, want to achieve larger goals in life? How do you advise them to? Option number one is having like incremental gains, like you mentioned. Option number two is setting the larger goal and then going all at it, like the grind and and it involves a lot of sacrifices, detaching yourself from the larger world, right? How do you see these two situations?
So I think the setting a high expectation on the result is the wrong thing. So having a high expectation on yourself that you think you can do it is more important. So you have to change that a little bit and say, okay, well, if I'm disciplined enough, if I'm put my time into it, I'm meticulous about this, I can do it. That expectation you should always have for yourself. But because I didn't get there, at least I've obtained that how would I say? I've attained that standard for myself, that level of expectation that I have on myself to do this thing is maintained, then I should be okay with it. The result is it could be completely out of your touch, right? Maybe the whole world completely changed. Maybe blockchain got hacked and Bitcoin got hacked and the whole industry. It's not up to you, right? Yeah. So then you have to shrug it off and go at it yourself. But you said, at least I accomplished this.
How important is emotional intelligence in today's world, which is like we're calling it the digital age, right? So technical intelligence and the knowledge about emerging technology, your tech skills, your business skills, your selling skills, everything is at par. But in this fast moving world where we literally, one does not have time for anything else apart from, okay, I want to achieve this, I'm going to do this no matter what. At the end of the month, I want to make enough money. And after 5 years, I hope my stocks pay well and I'm going to be a millionaire. So the world is running in that direction now. Everything, everywhere, all the countries are now in that race, right? In all of this materialism, for the lack of a better word, where does emotional intelligence come into picture?
I think it's very difficult to put that in there, right? I think the material world is an external thing outside of your inner self, I believe. So I think, maybe the world or society tells you this is success, this is what you need to achieve to be be recognized as a successful person, it should be completely different from what you want as yourself. And I think that's very difficult to do because everybody views themselves from an external lens. I think people don't view themselves from an internal lens. Say, this is how it makes me happy. This is what is going to make me a better person, or I'm content with who I am. And they use that external lens and then try to fit it into themselves. And I think people should kind of think about, that's one way that people would view me, but how would I view myself? What do I want to be? How do I want to be? I think you should think about that simultaneously. And I think it's quite hard, right, to do that. And I always think about, all my peers that we started off with, back in those days of investment banking. One guy's like a super successful hedge fund manager. Here I am doing crypto stuff. I mean, right? I mean, then I started thinking, well, what is he thinking about me? Does he think I'm like a scammy person? Or, what does my mother think about me? She thought I was going to be a lawyer one day, but no, here I am doing this crazy digital stuff, right? I mean, there's a lot of internal conflict, right? There's a lot of dilemma in that, but the way that you can kind of detach yourself from that and say, no, I'm actually doing something fun. This is what I want. You have to dig a little bit deeper into yourself, and then find your own version of success. And even if it doesn't match other people, I think it's quite important. I mean, it is bold to do that. It takes a huge amount of courage to say, I don't care what you think, right? But if you do want to have that emotional intelligence in this material world, that's what it takes, because it's you against the world almost in that way.
Oh, wow. Love it. Fantastic. Now, connecting this with the industry, like crypto, blockchain, and of course, now it's convergence with the other emerging technologies like AI, quantum, etc., etc. How do you think, or I don't know, this is, usually I'm told I don't ask this question properly, but I'm going to put it black and white. Which kind of people will lead the next 5-10 years? What mindset is required to be a leader in the next 5 to 10 years?
That's a very interesting question. I think that, we all kind of view successful people as this like, crazy person that has this vision that, it stops at nothing to get there. And then they'll bulldoze past people to get to where they want. And I think we've seen a bit too many of those in the past. And I think people are kind of wanting a bit more like a human touch. Obviously you need to be driven, right? Of course, for anything you need to be driven, but it doesn't mean that you can stab people in the back to get to where you are, and people kind of know that, they see that. I always see that, in the social media world, there's a lot of this kind of canceling culture and all these kind of stuff, where people are mean in general, and it's very easy to be mean if your face is not out there. I mean, if you're going to be a leader, I feel like people who can really be in touch with people, emotions, and support them to become better employees for the firm, or better people in general. I think people resonate with those type of people because of all this toxic, treatment that we do to each other in the digital world, and at least in the real world, I think people want, more, how would I say, a leader that can really hit their emotions, and I think that's quite difficult because there seems to be quite a detachment of like people in the digital, and it's getting worse, over time, and I think. People are starting to get exhausted of this kind of dual standard world.
Yeah. I'm just processing it, and it's like really interesting, and it's rare to find, like you rightly mentioned. It's very rare to find. How do you kind of connect these things together and create an environment where there are both the things coexist. One is like that crazy passion, that crazy hunger to drive and create a change, and second, still having that emotional component attached to it. Because sometimes when it's a real world, right? We are dealing with people who are always and always wanting to take something out of you. And every discussion has like a P&L attached to it. And when the world is moving like that, how do you kind of still maintain that sense of emotional intelligence and maintain that source of humanity in this world? Yeah. Very interesting.
It's interesting.
I think you just have to lead by example.
Right.
I think people follow leaders who can show examples, not tell them what to do. Right. So if you try to be a better person, if you think that human emotions are very important, and then show that, and then say that it's okay. Right. If you become like this, I don't know, like dictator type of leader, and that's what what your employees only see, then that's what they will become as well, right? Because they think that's the right thing. If if your parents were like that, then most likely you'll turn out that way as well, right? So I think showing that you're the first one to take that step, and then tell them that it's okay to take that step with you, right? But because you've done it and it's safe, and we can do this together. I think that kind of like leadership is really necessary.
Amazing. Where are you seeing now, coming back to the material world?
Segueing between worlds.
How do you see the next couple of years for the crypto and the blockchain industry? What's in the store according to you, and what is going to drive that majority adoption that we within the industry, we are like passionate believers that blockchain is going to be the next thing, crypto is going to be the next thing. Then you go home and speak with your parents. My parents still don't understand what I do. I try to explain them every day.
We've been trying to create a stradragy for how do we tell our parents what we do at Quranium?
We started with blockchain, okay, quantum security, okay. Now we are merging this. Just bring some money home so that you take care of yourself, right? So when all these things like technology things are advancing, right? How do you see, in this new world, and I always call it like the second version of Earth, because the progression in this coming decade is going to be much faster than anything before, because we are seeing all these individual technologies popping up, and they're going to come together and shape all the industries. So according to you, what does the next 5 years look like? Or even if you want to go short term, what does the next 12 months look like? What are going to be the driving forces, and what's in store for copper? How is copper going to marry these things together, and how do you see your long-term strategies from here?
Well, I think, Olivia, I was talking to this offline before we even recorded,
Yeah.
but I think a lot of the retail hype kind of faded away quite a lot because of the various factors that we've seen in the past couple of years. But this is the right time to actually be building something, right? I mean, we still see continued institutional adoption, whether it be digital assets or blockchain itself. We definitely see more adoption, right? Even if it's a byproduct like an ETF, that's also happening as well. So the Titanic is still kind of moving ahead. And you might have these little boats kind of like fading away to the side, but as long as the Titanic is moving, I think that's the important thing. And for institutional adoption, I think the steady incremental kind of progress is more important than huge market hypes and ups and downs in the market, right? We probably don't want any of that if you want institutional adoption, right? If you want enterprise to adopt blockchain, or if you want your banks of the world that want to use digital assets or blockchain technology, you don't want any of that hype. You just want to see that it's stable, and then you can actually use it. So I'm actually looking forward to this kind of time when it's still like kind of an institutional market, so that we can actually start really implementing this in various areas. So I think the next 12 months, I think that will be the driving force for both sides, the crypto and the blockchain space. And then and AI is going to be AI. It's been talked about since long time ago that it's coming. And that will find its place in wherever it needs to. I think there's be a convergence of both. As I mentioned, like for I just gave one example, but for the clients that we have, Copper has, who are hedge funds and proprietary investment firms and et cetera. I think a lot of this machine learning will get better and better. So from a portfolio management perspective, they can create portfolios much better with better risk analytical tools, forecasting, and then trade execute. Then it becomes a trade part, trade execution, trade cost analysis. All these things can be done much better with machine learning. And then after post trade, where do you see the risk in your portfolio, right? So portfolio risk management side, whether it be market risk or credit risk, all that will be done much better with machine learning. So our clients will be, focused more on that. And Copper needs to be able to safeguard their assets during the meantime, so that they don't have to think about that particular side, which is the most crucial part that they can perform these experiments using machine learning.
Very interesting. Thank you so much, Taka, for this fascinating discussion. Literally, you have blown our minds with the kind of personality you are, how you navigate between things, and I'm sure our viewers learned a lot today. Any last message for the audience before we wrap?
No, not at all. I mean, I think, a lot of technologies has its hypes and all that stuff, but, it usually kind of, matures to a level where we can actually, quiet down and build things. And I think that, if you have discipline and be able to adapt to the kind of, moving market, I think you can build things much better. And I think this time that we're in right now is probably the perfect time. So, good luck to everybody.
Thank you. Thank you so much, Taka. Ladies and gentlemen, that was Taka for us. On behalf of Olivia, Karlsson, my co-host, and myself, thank you for joining us on Quantum Minds. Stay tuned.